What's going on, everybody? Jeff here. Welcome back to the channel. What a wild week it has been. We've got record high inflation being reported. We've got companies that have stated their inflation costs have not yet been passed on to consumers. Yet we've got Fed presidents once again stating that inflation has peaked by looking at the data. And also you've got consumer sentiment that comes out today, which Americans feel more comfortable with their finances in June than they did in May. You've got complete polarizing opposite sides of the spectrum. I'm going to cover everything in this video and also compare it to the closest time that we know. So let's get right into it. First off, inflation comes out Wednesday at 9.1. Expectations were 8.8%. As you can see right here, by taking a look at this chart, where a heart of this lies is still in energy, more specifically gasoline. Okay, you're starting to see some of the other commodities obviously raise in prices because they get transported by fuel. However, taking a look at the producer price index, which was released on Thursday, it's a near record high, 11.3%. So that number is higher than the 9.1%. Its record was 11.6 in March. What this number indicates is that companies have not yet fully passed on the cost to consumers, meaning when they purchase, a product at wholesale and it costs them $1, they might sell it to for you to $2. If their cost goes up to $1.50, it immediately gets passed off onto the consumer. However, it takes time for them to see, okay, what's gone up in wages, what's gone up in fuel costs, what's gone up in other transportation, wholesale storage and so forth. It takes a little bit of time for them to gather that data and then adjust their pricing even again. This number shows and is an indication that prices are going to continue to go higher. We've also got the Fed fund that is not only fully pricing in 75 basis points, okay, at the end of the month here, but also potentially 100 basis point hike, which would be the largest we've seen in quite some time. So we've got all of this happening based on the information we got on Wednesday and Thursday. I will say this, okay? The core CPI was down. The expectations were 6.0. It came in at 5.9, indicating that all items less than food and energy have come down just a little bit, okay, or from their expectations. And clearly seeing gasoline come down a little bit might give some indication that inflation has peaked. However, we've heard this, being said before. We've got Fed presidents coming out stating, listen, we think it's peaked. We see it, starting to go down, fuel starting to go down. But here's things that are completely polarizing, okay? And before I get into talking just specifically about oil, the consumer sentiment comes out today. Now, consumer sentiment is basically how confident consumers feel about their financial conditions, okay? So we're still low, 51.1. Still very low. You got to think a year ago was 81.2. So we're still down 37% year over year. However, okay, from the previous month, it is up a little bit, meaning consumers are actually feeling slightly more confident. Is this an indication that potentially they've adjusted to some of these cost prices? They feel already that gasoline is starting to go down just a little bit. They think it's going to stay down. Okay, where are things going to lie? Well, here's where things get a little bit tricky. Okay, so recently and currently right now, Biden has made a trip over to Saudi Arabia to really come up with a deal to be able to purchase oil from Saudi Arabia. So we're still exporting or importing, we're still importing from a foreign country, meaning we are going to pay really whatever they set their prices at. You also have Warren Buffett, who continues, okay, to buy Occidental Petroleum Corporation, ticker symbol Oxy. It has reached its all-time, or it reached a massive high. I don't know about the all-time high. I don't study this chart very well, but it reached a massive high. We can take a look at it. And he's continuing to buy this all the way up here. This is going back for the entire year. I'm sure it has other time frames when you zoom out a little bit further, but still where it's at, he continues to buy it. Okay. So what is this an indication? Seeing this is Warren Buffett. He's got to know what he's doing. All right, well, that's where things turn back a little bit, and you have to take a look at what happened in the 1970s when inflation did hit as high as it is right now. First of all, in 1973, inflation more than doubled to 8.8%. Later in the decade, it would go to 12%. I mean, this lasted a long period of time, and considering we have yet to see the Fed really slap, on a massive Fed fund rate, All right, the Fed fund rate when it got up to the late, 70s and early 80s was much higher than inflation, which is what you need in order for it to come down. I remember my father's first mortgage. I've said this before, guys, in the early 80s was like 13%. All right. You see loan officers posting things all over social media talking about how, oh, mortgage rates at 5-6% really aren't that high because look at what they were back in this time frame. And it still took a long time to get that inflation down. When you take a look at how the stock market was affected, the S&P fell almost 40%. Okay, between 1970 and 74 before rebounding over the next 5 years. However, the Dow, which was the main indication back then, was just above 800 at the start. And after 10 years, it ended 5% higher. Okay, so you see this massive lull that actually drags out for a much longer period of time. And this is almost kind of what I have feel by seeing Warren Buffett continue to buy, this oil up at these prices that he just feels like it's going to continue to go higher. We don't have any, policy changes coming from inside the White House or the government that's going to stay, listen, and we're going to, continue to produce more from our own soil. All right. At one time we were a net exporter, which is why the price was down much further. We're going to continue to pay their prices. And I think that's what he sees. Okay. But last thing that did come in as well, which really is going to coincide with how we fight inflation, is retail sales jump, which means consumers are still spending. All right. So if we don't have the Fed fund rate higher than inflation, as you can see, inflation is at 9.1. Currently, the Fed fund rate is sitting just at between that 1.5 and 1.75. Let's say it gets jumped up to 2.5, 2.75. There's still a massive gap between the 9.1 inflation where we are at. Consumers are still spending. We're having a hard time with the labor market, okay, and a hard time keeping up with that supply chain. The demand is still there. And at this point, it really feels like inflation is going to just, stick around. So what does that leave for the market? That's, really what you guys are thinking of. Well, here we go. We've got 2 weeks, a little less than 2 weeks, okay, before the Fed meets. And a lot of these charts we've talked about, a lot of these, bigger charts are really set up for some breakout areas, okay, especially Apple, which is really testing over that 150, got rejected a little bit earlier today. Okay, but we're setting up, I say, a little bit of relief rally to continue. We've been consolidating nicely within this range. I do still think a test of right here about this 390, 391, get over that. Well, now we've got to get over this gap up to 394, which is where we're going to test that 401 area. That gap is eventually going to get filled. Are we going to drop to the downside and continue to hit all-time lows and fill this gap? Or we're going to go back up to retest it? That remains to be unseen, but you've got earnings around the corner. I'm going to continue to make another video after just the first couple of days of banks reporting earnings. We saw some polarizing sides to it and how investors are reacting. Are they taking time to digest this? Or is this like, listen, we've got a little bit of a green light. The market is always looking for a time to rally inside of a bear market. And that could just be it. But guys, like I said, prepare this over the long term, and study. I've done a lot more studying lately about, what occurred in the 1970s inflation, not just from a, historical standpoint, but now because we're starting to mimic, that era. So how the stock market reacted, and how economic policies, affected this as well. So guys, that's it for this video. I'll see you in the next one.